keep it dry, and just whenever like you have a question, you want to present your some thought process, just raise your hand and unmute yourself and you can speak. So that is the agendas of today's meeting. And one more thing, like I would be very happy if you can broaden your vision after this meeting, and that is the only key takeaway I want to take from this meeting that we are having. Any questions, anything, let me know. Sure. So let's start the Vishal, shall we start, or
Yeah,
are we?
we can start. We are sitting at 30 number, so maybe a few more folks will join in the next 5 minutes. So let's start off now itself. Yeah.
Sure. ठीक है. Let me present my screen.
I'll
Uh,
yeah.
Sorry, I lost you in last 1 minute.
Yeah, you can share your screen. Yeah.
Sure. Okay. Uh, let's first start with like what is trading, right? So algo and everything is secondary. First, we need to understand what is actually a trade. Like there in a trade, there has to be two parties, right? One is a buyer and one is a seller, and like you exchange something with the other party. There is never a trade where one is when someone is entering a trade, they are thinking that they are going to make loss. Both the party are happy when they are making a trade. So that is a very unique thing of a trade, right? uh, like with my experience in trading, I have seen that any trade is 80% psychology and 20% process of evaluating a trade, placing the order, and etc. But most important part for any trade is the psychology, and that is where I think API plays a very important role in uh, and has an edge towards a trade. Uh, like for an example, and whenever you trade, there has to be an edge. Otherwise, it will always be a loss making, or in a long run, it will be a uh, like your PNL will never be positive. That's for sure. So whenever we take a trade, or whenever we are in process of like starting our trading journey, it is very important to keep an edge. And what is an edge, by the way? So edge is anything that you are specialized into, right? Like API trading as a trading offers you edge like execution speed, decision making, right? So some kind of edge has to be there in your trading. Otherwise, there will never be a profitable trade. Also, by currently, what in a trade in today's scenario, we see that people generally just take a trade whenever they have capital and then say कि हाँ हम तो trader हैं भाई. तो ऐसा नहीं होता है. It is very important to know कि when to enter, when to exit, and when to hold a position. Like a planning of a trade is very much important. Like you will have to know ki why did you enter a trade, why are you exiting at this point, what is happening in between, what are your down points, what are your risks in this trade, and everything has to be evaluated. Otherwise, it is not a trade, it is just pure gambling. ठीक है. तो like it is very much important कि कब trade नहीं करना है, when not to trade rather than when to trade. uh, Capital management, like I don't think anyone has unlimited amount of capital. ठीक है, तो capital has to be utilized very appropriately. It cannot be like पैसे पड़े हैं अकाउंट में तो ट्रेड लेना है. तो ये कुछ छोटे मोटे पॉइंट्स है जो मैंने अपनी ट्रेडिंग जर्नी में थोड़ा बहुत समझा है. मतलब basically that is what I wanted to bring out in this meeting. Is basically I'm just here to share my experience with the trading rather than giving a unilateral ज्ञान session कि आप ऐसा करोगे तो ये होगा, ये करोगे तो ये होगा. ठीक है. मेरा एक बहुत सिंपल फंडा है, वेरी सिंपल फंडा आई फॉलो इज रिटर्न ऑफ कैपिटल इज मोर इंपॉर्टेंट देन रिटर्न ऑन कैपिटल. आई डोंट वांट कि मेरा पैसा डूबे. whenever I take a trade, आई सी की पैसा कैसे बढ़ेगा, या तो उतना ही वापस आ जाएगा या थोड़ा सा लॉस ले लूंगा चलेगा, लेकिन मेरा पैसा कभी भी स्टक या डूबना नहीं चाहिए इन एनी ट्रेड. That is one of the key principle I follow when I trade. अब इसमें whenever like any doubts, any open points, anything that you want to call out, let me know. Hmm, आज संडे आफ्टरनून है लेकिन इंटरेक्टिव हो सकते हैं हम.
Absolutely, guys. Just try to make the best out of this session. All right.
Yeah,
So
sure.
yeah, we'll be starting off
ईशान,
by.
how API plays a role. Okay, sure. तो जनरली आपने देखा होगा कि वेन एवर वी डू ट्रेडिंग वी हैव टू बी इन फ्रंट ऑफ स्क्रीन, राइट? लाइक जब भी ट्रेडिंग करेंगे तो हमें वी हैव टू यूटिलाइज आवर टाइम एंड सी द ट्रेड्स. अब होता क्या है जनरली when when there is a trade going on, when the trade is running, right? So we see कि $50 प्रॉफिट है, $500 नेगेटिव है, $30. तो इमोशंस आर देयर ऑलवेज when you are seeing the screen, when you are in front of a screen. Your strategy was there. Like अगर आपको एक trade imagine करो from starting to end. Let's take an example of BTC trade, ठीक है? So whenever I enter a trade BTC में, ठीक है, आई थॉट कि मैंने जो भी कोई भी आप स्ट्रेटेजी ले सकते हो, आपने ले लिया रेजिस्टेंस है, सपोर्ट है, व्हाटएवर, आपने देखा कि मेरे को दिख रहा है कि 60,000 पे सपोर्ट है, यू प्लान टू एंटर अ ट्रेड, ठीक है, यू टुक अ ट्रेड ओवर देयर. नाउ BTC currently dropped from there to 59,500. You are seeing कि there is a loss of $500 on your system, and you start panicking because maybe you never thought कि मैं इतना स्टॉप लॉस ले सकता हूँ और एनीथिंग व्हाटएवर, ठीक है. बट लेट्स से वी डिजाइन द कंप्लीट स्ट्रैटेजी यूजिंग कोड. नाउ व्हाट विल हैपन? विल यू सिट इन फ्रंट ऑफ द सिस्टम एंड मॉनिटर इट? नो. ठीक है. सेकेंडली, डज द कंप्यूटर हैज दैट इमोशनल क्वेश्चन कि वो देख के डरेगा या लालची होगा? सो आई थिंक ट्रेड हैज टू एस्पेक्ट्स, वेरी very specifically fear and greed, right? So whenever there is a like fear and greed starts kicking in your trade, you start taking actions, and that is where API helps. That is, API will not take any emotional decision but will only work through pre-programmed instructions. Now pre-programmed instructions का क्या मतलब हुआ? Whatever was your strategy, that you will code it. So basically you will start writing, okay, we have to enter this position because we want to we are seeing this level of trade happening and we want to place an order there. My stop loss will be this, my take profit will be this. That's it. And API will execute as it is without any change in your trading plan. And you don't even have to monitor. You can implement your risk management strategies, but there will be no emotional quotient there. So that is how trade API helps in your trading. Okay. Secondly, in manual trading, what happens? You are spending your whole time sitting in front of your laptop and your on your computer and monitoring your trades. So there you are wasting your time, then you are wasting your health and everything. API, on the other hand, helps very like it like you can make it as a passive source of income rather than an active source of income. One drawback that API has is there can be technical risks if there are no controls. So basically, like let's say you have implemented a beautiful system which makes you profit. One API sends you wrong data, or the WebSockets are returning you wrong set of information. Your bot will start taking wrong decisions. So these are some of the nuances we have to think of when we are building API. So all controls have to be there, which can mitigate this kind of risks. What are the required resources if you want to start API trading? What are the required resources, right? There are two things. Primarily, I believe you already know manual trading, so you are subject matter expertise in normal trades, right? So whatever thought process or whatever idea you have in your mind, you just need to make an algorithm out of it. Okay. And then we need a programming language, which can be either Python, C Sharp, it can be Java, it can be Golang. And using these languages, we can use it and make that algorithm into a actionable thing for computer. So basically, what they will do is they will take whatever your strategy is, they will take your steps, and they will like start taking actions as you want, right? And then so I'll even show one case study which currently I do on on our this trading, API trading. So anyone who is aware of arbitrage, what is arbitrage? You can raise your hands, comment. Yeah, sure, Arin. Please go ahead.
So basically, you make the difference, right, between price or volatility. Like, for example, one exchange, the Bitcoin bid is different, and some other exchange the price is different. So you make the difference like that, or it can be done in volatility as well.
Sure.
Basically, making the spread. That's all.
Correct. That's correct. So basically, it's a risk-free method to execute two trades on two exchanges at the same time and making profits out of it. Sure. So, in a layman's term, I would again like to explain it. Like, for example, you go to your nearest vegetable market, you buy a apple for 100 rupees. You know that there is a marketplace a kilometer away. You go and you sell it there at 150. Like condition, you have a buyer over there. So basically, you make a arbitrage of 50 rupees by selling the same product at same time without making any difference. So let's say I'll just walk you through one screen. So for example, let's name it as exchange one. Okay, and there is a bid of 10 rupees and there is a volume demand of 1,000, whereas ask is at 11 and volume is 550. There is an exchange two where the bid is 12, volume is 13. So how will be an arbitrage possible? Basically, you will buy it from exchange one and place a sell at exchange 2 at 12. So what is the profit you made? 1 rupees, assuming that there is no fees, assuming that there is no fees. Okay. Now let's see real time scenario where like you may say that this is a theoretical thing, but let's say there's a real time scenario where arbitrage can be seen. So this is coin DCX and this is CoinSwitch. Uh, sorry. Oh, huh. So basically, you can see over there that I can buy Solana at 12707 and I can sell Solana at 12608, which is not an arbitrage. Let's try to find some other coin. Uh, Maybe some coins like Shiba. I'm just trying. When I started, I think there was some arbitrage available, but let's see. So 1544, 1531. And 1550 and 1535. So again, here it's not available. BTC. Hmm. So currently on a live trade, I am not able to find that there is a live arbitrage available currently. But what in our systems we do is we have placed systems where we see coins. Like I can show you some of my orders where I can show you. So when you see this, like there's a coin called a Sundog. So I executed this buy order on it for 20.18 rupees and I sold within 5 seconds on C2C2. This is another exchange at 0.24 USDT. So basically making arbitrage of 1.5%. So this is how it is done. This is a CoinSwitch application that I use, and like if you want to start it, you can start it using the API documentation they have. Like if you go to their API trading platform, you will see that there is an API documentation available. Also, some of the things that like I want to focus over here is this is complete my trading journey from 2017 to 2025. In crypto spots, if you see that in 2017 to 22, I made a profit of 14 lakhs and I was doing it manually. Okay. I made a loss in futures, maybe near about 1 lakh. I made loss in FNO, equity FNO, near about 5 lakhs. From 23 to 24, I started changing my journey from manual to API. And 23, 24, I made a spot profit of 80 lakhs. And in crypto futures, I made currently like a loss of 4 lakhs. And in future and option equity, I made a loss of minus 5 lakhs, and both were manual trades. Uh, in 24 25, currently I am sitting at 16 lakh ka profit in API trading. I have changed my FNA to API trading, and I've changed my losses to profit on 1 lakh. And in crypto futures, I am suffering a loss of minus 7 lakhs this year. So any insights that you want to share to years of my trading history?
Gaurav, there are a few doubts in the chat, by the way.
Sure. Please, can you help me out with this?
Sure, sure, absolutely.
Yeah.
So, someone is asking regarding the TDS difference between that should ideally exist, right? When it
Correct.
comes,
So
yeah,
yes, so there will always be a TDS that government collects on your behalf. So for example, for example, let's say you bought something at 100 rupees and you are selling something at 101 rupees. So 1 rupee will be going into TDS. That is there, but that is not your loss. That is the revenue that government has kept it. And once you file your taxes, you will get your refund back once you file your taxes. So basically, the profit you are getting is 70 paisa, 30 paisa government will keep, 70 paisa it will refund to you. Hope that answers.
yep, yep. I hope it should answer. Yeah, sorry, are you there? Cool, we can go for it. No worries.
Sure. Any other questions?
Hi Gaurav, I have one question.
Yeah, Ashma.
So when you've been API trading or algorithmically trading your system, did you prefer limit orders or market orders? And if any of the one, why were your bias like that?
Sure. So initially, I started with market orders, but then eventually, as the time progressed, I shifted to limit orders, and I'll tell you how. Why? Because initially market orders were doing fine because there were a lot of not much competition into it, and like I was one of the only 2 or 3 players who were doing API trading on these systems. So that was working for me. But as the competition became, there was a lot of competition regards to trades. For example, if you see, for a single trade, there will be 5 people who would be running after it, right? So then it can happen that you place a market order, but then that trade would have gone and you would have still got the coin, but then you would be sitting it to sell it, but you will not get the same price. So then you will have to use some risk management strategies to either sell it off the coin at some little loss or at least at your break even price.
Okay, okay, thank you.
Well, as someone asked that whether it is FNO in Indian market, yes, it is FNO in Indian market. Yes, so my trading journey has been quite bad from 17 to 24 with FNO Indian market, and like it was all manual. So I knew for a fact that my emotions are getting into place. And like you read SEBI reports and everything, yes, I was among the 90% who was losing money. From last 3 months, I have changed my strategy. I've started using algos and API trading on the same thing. And I'm an option seller. I'm not an option buyer. So I've started like converting my losses into profit. Uh, what's your capital to make 80 lakhs profit? My capital last year was 30 lakh rupees. And basically, last year was a different ball game altogether because there were very less participants in the market, and I had an edge. That market was pretty nascent. I was their first mover advantage, and I made I kept my margins pretty high while doing arbitrage trading, and then I was able to make 200% near about profit. So that's it from questionnaire perspective. Again, moving back to slides. Uh, okay, so like I explained to you how this arbitrage works. Can you help me identify, like, let's do a case study kind of thing and start, like, how should we go about if we want to make the strategy as an algorithm? Works?
Hi Gaurav, can I ask one more question before we move forward?
Sure, Ashman.
Then you said that you made around 200% gain on your capital.
Mhm.
Did you use any leverage, or and what kind of leverage did you use?
No, it was a spot trading, pure spot trading, so no leverage was used.
Okay.
Yeah. Someone asked about the 30% tax. Yes, there is a 30% tax, and actually, it is not exactly 30%. It is more than 30% because you don't get offset for your losses. So eventually, last year I paid around 35 to 40% taxes. Is it possible to make algo that shows chart pattern breakout and or breakdown? Yes. So I'll tell you, like, developing a code is 20% part of it. Making a SME or a logic is 80% part of it. If you know that your logic works, you have back tested your logic, okay, then I think making algo is not a difficult part. It is, everything is possible. Everything is possible, and then you can just convert your logic steps into algorithm and start placing your orders. What's your strategy? Last year, my only strategy was arbitrage. This year, I've started forming another strategies also. Yeah, Rin, please go ahead.
Yeah, I wanted to ask that are you sitting on order books? Like how deep are you sitting or
No, so last year, I'm telling you, it was pure arbitrage where I'm not sitting on order book. I
Mhm.
come, I place order, I buy on markets, I sell on markets, and I move out. I
Okay,
convert cash into cash.
okay.
Have you ever suffered loss due to API request failure? Yes, obviously. So what has happened is, because of technical failures, fewer times, like I can remember on my fingertips, like 5 or 6 times, what has happened is my whole capital would get stuck into one coin. And this is a case of a month ago, when what happened was WebSockets was not returning me the right amount, and my whole 15 lakhs got accumulated into one uh, dog coin. So basically, it was panicking that, okay, my 15 lakh is blocked in one coin, and it can go down 20%, it can go up 20%, I don't know. But I took a loss of 2.5% on market, and then I exited, because for me, the strategy is converting cash into cash. So cash is my whole raw material, and cash is my output. So I wanted to get out of that trade, and I took a loss of 2.5% that time. So yeah, these can happen, and what you need to do again is then make controls. For example, good case study to discuss. So let's say that you see that your algorithm did one trade, you bought it, but you were not able to sell it, right? You again went to it, you saw that you bought it, but you were not able to sell. So after two or three hits, your algorithm should develop an intelligence that the orders are not getting sold. So stop trading on this coin. So this is one of the insights I got, and I changed my code over there. Yeah, Yubraj, go ahead, please go ahead.
Hello, Gaurav. You said you do arbitrage trading, and I don't have much idea about that kind of trading. So you mentioned one thing that this form of trading you have little losses. What does do you mean by that thing, like little loss in
In this
arbitrage trading?
strategy, I have little loss. So yeah, so arbitrage, like I hope I was able to explain you what arbitrage trading is, right?
Yes, I got a little bit of it. I understood a little bit of it. Like it's
Uh-huh.
a difference of spread.
Correct. So basically, you now the next question is you want to understand whether the losses are less compared to the profits.
Yes.
Yeah. So what happens is basically, let's say there are two markets, and then if there is an arbitrage possible, and if you are able to execute it, you are making a risk-free profit, right? So there is no point of loss unless and until someone else picks it up in front of you, or like you are able to buy but you are not able to sell, or your market moves like highly fluctuating kind of thing where you were able to buy but now the market has gone down 5-7%, so you are sitting at a loss. Maybe that is the only case where those are the tail events when you will start facing losses. What is the most efficient way to implement error handling in our algorithm? Sorry, I lost the question, give me a minute. What is the most efficient way to implement error handling in our trading algorithm using the API? What are recovering? What do you in this case inspected failures? So, Nitish, it is a broad question and it depends. Basically, you will have to see the scenarios. You will have to think out of all the scenarios that can go wrong with your trades and then make controls on it. For example, we made a algorithm, but we never thought ki this can also happen that wrong data will be given to us. So then we learned that okay, there has to be a mechanism which can control this. So it is a part and parcel of trades, and with the life cycle of trade and with maturity in time in trading, you'll learn that what are the other scenarios also you need to implement in your API trading so that you can mitigate your losses. What kind of latencies are there? So latencies would be there, like latencies are 250 ms kind of thing, which will be there, and we can deploy some of the mechanism to reduce the latencies. For example, you can shift your server to the server of the exchange, like server location of the exchange. You can like improve your systems. For example, you can start using some high configuration AWS systems, which can be reducing your speed, like increasing your speed and reducing the latencies. These are the things. I hope I have answered this question, Arin. Um, End-to-end latency would be somewhere around from start to end of the trades, depending on your logic, but a simple logic would have somewhere around 500 ms. Shaurya, can you please emphasize what is DMA? High API trading feature is chargeable feature in CoinSwitch. No, API trading feature is not a chargeable feature. Basically, the brokerage will still exist, like whatever manual orders you push, or whether you push API order, brokerage will exist, but there is no other fees for API. It's at par with the manual trading.
By the way, Nitesh and Shaurya will be having a dedicated session on direct market access in a few weeks from now. So don't worry about it.
Could you show us one of your API trades? How do you do algo and execute the trade? So Yubraj, I think I showed you one of the executed trade that I had. Again, going to that same, it's basically, so you can see that over here, Degen was sold for some around 0.01 USDT, and I bought Degen near about at 0.96 INR. So this is one of the trade that got executed lastly, which shows uh, then arbitrage available. So this was $8178 and sorry, 8178 rupees, and we got somewhere around $94 out of it. And these are some order values, and this is after TDS, after fees and everything. uh, how do you make sure that your strategy backtest does not have any forward bias? So, Ashmak, could you please elaborate on that? Like, I hope, like, I'm not getting exactly the question you want to ask. So, backtesting, yes. So basically, backtesting, but data is very important. If you see, if I make a simple chart, like chart ka data, and take it from 2020 to 2022 in crypto period, then I'm making a mistake, because it was completely a bull cycle and I did not take a complete data set of a bear cycle as well, which will keep a bias that I did not take my data set complete. And then what will happen is, if there is a bear cycle, you will start facing losses. And the other thing is like forward bias. I think I hope I answered your question over here.
Yes, you answered my question exactly. I was asking the same only, that if we have a bias in the particular batters, that when it was a bull.
It completely depends on the test. So, like one of the logic I always follow is, in back testing, don't go to algorithm first. Spend your 80-85% of your time in cleaning your data set. If your data set is not very clear or clean, you will not be able to make an algorithm out of it.
Actually, Gaurav, I'd like to add on to this. Like, we were actually building one simple crossover strategy for BTC futures. All right. So, looking at the past 1 year data, considering the market to be more on the bullish side, what we saw was the long trades essentially were highly accurate. But if you were to consider the short side trades as well, so the combined PNL that we're getting was much lower than what we would essentially get only if we took the long trades. So basically, how we tried to solve that was, we tried to implement something that essentially tells you the momentum of the market on any direction, and that's how the ROI was improved. So more on that later. So yeah,
Can I ask one more question on this?
yeah, sure.
So when you said that it was basically a position bias, that only your long trades were profitable and short trades were not. So in this scenario, do you kind of do this thing where you neglect all the short positions and just only keep on long positions, or you maintain both the positions as well?
Essentially, you need to have something here that tells you about the market trend, right? So in case that that quantifiable parameter that you are looking at, right, it is essentially higher, then we only stick to long trades. All right. If it is
Yeah.
lower than that threshold value, you could probably stick to long and short both, right? So if you look at simple 21-200 crossover on 4 hours time frame on BTC for the past 4 or 5 months, I believe you will end up with a break even PNL, right? But if you look at
Hmm.
the last for the last 1 year, then essentially if we go for only long trades, then you are sitting with a profit of nearly 30-35% with 1x leverage, right? So yeah, so that's where we tried implementing RSI and a few other indicators just to understand the market trend in a better fashion and improve the strategy. I'll share you the code, right, that we are currently working on. So
Yeah.
no worries
Right.
on
Right.
that.
Okay. Thank you.
There was a question that how do you detect whether the WebSockets are returning wrong data or not? So basically, there are two ways. Either you are continuously monitoring, but then there's no use of API trading. But the other way is you have seen something abnormal activities in your trades, and then you go and inspect, and then you find out that okay, there was a problem with the WebSockets or with anything else, and then you start debugging it. So that is how you identify. There is no easy way out. Like you will have to see some of the deviation from your normal trading activity. One more point, like because this is there, so I came to I wanted to add one more point. By complete passive, I don't mean that we can go ghost on our system. Basically, you need to monitor it once a day, or kind of like overnight. You can start making your journal, not journal exactly, but a PNL, so that you can see any deviations when you like for example, I maintained my complete PNL last year. If I show you uh, with the PNL kind of thing. So this is my complete PNL. I started making it, and then like I kept something activities where I can see some of the deviations. I saw some of the graph changes and all those things. So I generally maintain it so that in case when I see that there is a deviation, I understand there are some WebSockets differences or something which I can check. What percentage of algo traders base their strategy on arbitrage trading? A bit. This is a good question, but like for example, first of all, it's not a very specific thing. Like algo trading means arbitrage, or arbitrage means algo trading. This kind of thing. Arbitrage is just one of the thing for algo trading, and basically, like in Indian market, I have tried arbitrage in foreign markets as well, but it was a failure for me. Like the markets are very efficient, so we need to understand which are the weaker markets, and in a weaker market only arbitrage will be possible, otherwise it will not be possible. And eventually my vision says that in 2 to 3 years arbitrage would also cease to exist in Indian market. Indian markets will become that efficient that arbitrage won't exist, and that is where we need to work on making new strategies, making new algorithms that can help our trading journey. I'm preparing for an arbitrage strategy for BTC USDT and ETH USDT. Where can I expect futures API to launch? So I think as far as I know, it will take 3 to 4 weeks for CoinSwitch team to launch futures API, but I can't commit to it. Maybe Bishal, you can contact Shaurya when it is launched.
Yeah, but actually, that's a part of our assignment. We gave an assignment to all of our folks out there to prepare an arbitrage between BTC and Ethereum using dominance data, right? So let's see who makes it
Sure.
first.
What do you believe are the key macroeconomic or industry specific drivers that will shape equity performance in the fintech sector over the next 12 to 18 months? That will shape equity performance in fintech sector. Like, sorry, Nitish, what do you exactly mean by this? Can you come on the speaker and elaborate? Like, I can answer that. Mm, okay. Can you please show a complete process of how do you strategies trade backtest their strategy and then go about implementing it through API? Sure. Ashmak, yeah, sure.
Yeah, now we were talking about the BTC and Ethereum arbitrage strategy. So is it a pairs trading strategy or is it something different?
No, someone basically asked about they want to execute it. Maybe they are thinking of pair strategy. But I don't think there are pairs open on CoinSwitch.
Okay, because recently I was
Currently, they only have USDT based pair.
Ashmak, it is more on the lines of, say, for example, you buy BTC USDT, you short on ETH USDT, right? And you hold the trade until the delta is
Hmm.
maybe more than 0.2%. I think we're discussing
That
this.
is a long short strategy. Basically, what will happen is if you are of opinion that BTC dominance will continue to increase, then you can go BTC long and ETH short. But if you see that BTC dominance will decrease, then you should go ETH long and BTC short.
Okay,
That's
it's a long short strategy. Okay.
correct. Uh, Akshat, can you please share the process? Hey Gaurav, are you affiliated with any trading firm or do you use own capital? No, I use my own capital. I'm not affiliated with any trading firm. This is not a paid session. I'm not getting any money out of this session. So yes. Okay, so we were coming to the case study part of arbitrage trading. So if we have understood that how an arbitrage trade works, let's go process by process in at least formulating a algorithm out of it. So what will be my first step? First of all, I have to read all the bid and ask of every coin that is currently listed on an exchange. I have to see that if those coin pairs are again matching to the second exchange and identify which are the common coins across both the exchange. Start taking out the prices of both the coins, like both the exchanges coins, same coins. And now we'll have to calculate what is the arbitrage available. If that arbitrage is available above a threshold, by threshold I mean it should cover my fees, it should cover my whatever profit I want to make. I'm okay with a ratio, and then I have to start placing orders on it. Like let's say for example, I identify there is a arbitrage available of 0.4% between BTC on CoinSwitch and BTC on DCX, but I am not comfortable with 0.4%. So I will let that skip. I will keep my thresholds at a level where I am comfortable. Okay. Now, let's say we have checked that. Okay. Now we'll also have to check the executable volume. So when I was showing this thing to you, it was basically that 1,000 volume is available to buy and 3,000 is available, sorry, 550 is available to buy and 3,000 is available to sell. So can I sell 3,000? No, I can sell only 550. So that is my limit that I can sell. So we'll have to identify a executable volume that can be sent. Then what we need to do, we have to start placing the orders. We have to start sending the orders to exchange, and there comes the engineering part of it, where people were asking about the latency. By latency, what I mean is how much delay is there to put an order. So that is a engineering thing that is set by the exchanger itself. There will be a minimum latency which we cannot go below that, but we'll have to engineer it as efficient as possible to keep the latencies low. Now, once we have placed the order, we will have to monitor the order. Whether monitor the order by means automatically monitor, not sitting and monitoring it, but monitor the order whether the order was completed or not. Let's say if my buy order was not completed, what will I do? I will cancel the order. Okay. But let's say my buy order was completed, but my sell order was not completed. Now what will I do? I will implement my risk management strategies where I will try to unblock my capital either by selling it at a minimum profit or by taking some percentage of loss, which I am comfortable with. Let's say my whole system starts giving me such scenarios more often compared to what is a happy flow. What is a happy flow? Happy flow means basically you are buying, you are selling at a continuously same time, and then there is no risk involved. So currently my system works at 85% efficiency, where 85% of the times what I desire happens. 15% of the time either my order goes to a loss making stage or either it goes to a break even stage. So let's say some industrial shift happens, some changes happen, and what happens is I start doing more losses compared to profits. That day I will stop my strategy and change my strategies, or I will shift to a new strategy. So for that we will have to set some alarms, set some reporting metric over it to check over it. So this is the some of the steps we need to think from start to end for implementing an algorithm on a basic strategy or on a simple strategy. Any questions on this?
Hello, sir. Shubham here. I
Yes, sure.
have a question. Like when you said you are placing orders and some of them get fulfilled, like when you place order, you don't place all your order at a same price, right? You place it at different price levels.
Uh,
So,
no. So basically, if an arbitrage is available, it will be available at the same price only. So for example, on an exchange one, it is available at 10 rupees. I will place order at 10 rupees only, one order.
So, but there might be a chance that if in real time the things are getting placed, like we have a 1,000 to 500 buy and share volume, like it's uh, not all the shares that we want to buy or sell is not available on the other end. Then
Correct.
how do we ensure in the real time that, let's suppose 300 order has been placed and for the rest 200 orders the buyers or sellers are not there, then how will you stop it at that
Sure.
real time
So
level?
basically, you mean that my order got partially executed, but partially it did not.
Yeah.
Yeah. So basically, partially executed orders will be there, and there will be some orders which will get partially executed for buy side, and the algorithm will sell the partially or which were bought. Like for example, out of 500, 300 were bought. So algorithm will sell the 300 quantity, and for 200 quantity, it will go into risk management approach.
Okay, but when we are back testing it, we won't have that live data or the fluctuation that takes place during the live trade. How do you manage and back test that the strategy that we have built is perfectly sitting on the
Uh,
fluctuation that we have?
for I think for arbitrage strategies, backtesting will only give you the problem statements. It won't give you the output. Like I'll tell you, like backtesting will work for a signal generating system where
Hmm.
you generate signals and then you take it. For arbitrage, it is basically very simple that you have to. Acha, let me ask you one question. What is the edge of an arbitrage system?
Uh, the price difference that we have, we get an edge over that.
No, the edge is the execution speed.
Okay, cool.
Right. So your problem statement will be only one thing, that your execution speed should be fastest in the market. Right. So you'll have to the engineering problem will be to make it as fast as possible.
Compared to others.
Correct.
Okay, fine.
So there is no, so I shared a very simple case study with you, which is not a rocket science. Two exchanges are there, price differences are there. You have to take benefit out of it. So basically in this, the only simple edge was that your execution speed should be highest, or like best in the market. But there are other strategies which are there from technical perspective, from fundamental perspective, which requires more of back testing that you were talking about, where we will have to go back to the history, check that how it was behaving that time. Is my indicator working exactly like how it was working behind? And then the market conditions change. You will have to evolve your indicators as well. And then like you will have to manage a risk reward ratio of some percentage that you are comfortable with. And then you have to start doing it. But like seen in FNO market, that your backtesting strategies are very way far different from your real life trades execution. There are problems of slippages. For example, we started with the account, and we thought that how much can we scale it? Like we are generating good profits, but let's say can we deploy a CR over there and generate the same kind of profit? The answer was no, because there are other problems that comes into place. That like for example, in Nifty 50 or in any other derivatives segment, if you start will pushing 50 lakh ka order, option premium ka order, there will be high slippages. So that backtesting will not be helpful for that, but your live market will be able to teach you that thing. Arin, should we use faster languages like C++ or ASM? Perfectly fine. Like I think C++ is one of the fastest language for HFTs, and The only problem with C++ is we need to build a lot of libraries, and it has to be made from scratch. But like if you are an expert in C++, there's nothing better than C++. Any further questions do we have for this session? Please be free. Like if you have another other expectations out of this session, let us know, and then we have 10 minutes left, and we can talk about it. Ashmak, yeah, please go ahead.
Can you show some of the strategy examples so that uh, we can, go forward and brainstorm such ideas and find more ideas like that?
Uh, For example, see, I can't disclose my proprietary strategies over here, but I can always share about some common strategies that are being followed. For example, dollar average, right? So, for example, you start taking, you first have to build a hypothesis. For example, let's say in a long term, in a 1 year down time period, like I'm seeing BTC going from 60 to 120K. Okay. Now you start making a strategy where you build a statistic edge where you see that, okay, I will buy something uh, below 1 median of moving average, and I will continue buying it if it falls another 1 median, one standard deviation from that moving average. Okay, so and you like average your positions. And then once the BTC again recovers and moves according to your hypothesis, which was like it, in a long run, it will go up only, you start selling and booking profits. So by some simple statistics and some simple models, you can try and backtest it so that this is a food for thought for this session.
Okay. So when do you feel that your system or your strategy gets overfit? Like you've put in a lot of parameters and which can,
Uh, yeah, overfitting is a common problem when
create a bias.
yes, yes, yes. So what will happen basically is when you start taking like, sorry, I'm facing an echo. Hello. Ah. So what will happen over here is कि basically you started with an preliminary data, and then once you are not seeing your result like desired outcome, you start fitting more data just to make your outcome look like it is good. So that is where your overfitting starts giving you a problem, which is not logical. For example, I would say that I put an indicator of moving average, I put an indicator of RSI, and I saw that my efficiency was 45%, let's say. Okay. And then what I did was I now started building some other logic based on MACD. Now I started Bollinger Band also. I overfitted it with 5 indicators. Then I started seeing that, okay, once the moving average goes one division down, I will fit that also. I will see negative, false positives. I will remove, try to see scenarios and fit other indicators that will remove that false positive. There, where it starts like problem of overfitting. And to be very honest, any strategy that is giving you 60 to 65% of positive results with a risk reward of 1 is to 1.5 also is a good strategy. Trust me.
Okay, thank you.
By giving prompt to AI, can we generate our API code, right? Like feeding our ideas to it. Elaverson, so yes, you can do that, but at least you need some basic coding idea, because AI can give you sometimes wrong things or wrong codes depending on what it understands by your prompt. So like basically it will not give you like end-to-end program and you can directly copy paste without having coding knowledge. But like for example, if you have a good idea of coding, you can take it, like you can use AI and prompt it well to get the code that is doable. Yes.
Sir, I have another question. Like, apart from having a strategy on price action, do we
Hmm.
have do you recommend building strategies on open interest or the volume that we see on the price ladder? Like, suppose reaching a certain price, if the volumes or the open interest increases at a certain level, do we strategize at counteracting or acting in that flow where the open interest toward the buy or sell side increases?
So like open interest first of all has a vast meaning to in with
Not
respect
in
to future.
option sense, but in the
Correct, correct.
sense of yeah,
In the sense of spot, right?
yeah, yeah.
So basically, yes, that with the price action, I think volume plays a very good role. Like if you see that volume is always a confirmation to the price action. If you see, like if you see that okay, there is a breakout, but breakout with a volume, then only I think you should enter a trade. Otherwise, it can be false alarm.
True. Yeah.
Can you please recommend any source to learn algo trading? Karan, I think we need to first understand that we need to make a subject matter expertise first. For that, I would always recommend to in by reading some books which I can mail you. Like just like I'll just drop my email ID and you can send me a hi, or uh, you can connect with me on email or on LinkedIn. But then what you can do is like I can share you the good books which are there for technicals, which are good for fundamentals, which are good for making codes, which are good for getting into pitfalls when you start coding. So yes, I think that will be there. I can share you that. Are these thresholds set to halt trading if market volatility exceeds a certain level? Shivam, I did not understand the question very well. Uh, could you please elaborate on it? Guys, we have last 2 minutes, so please, whatever is there, we can wrap it up as soon as possible. So, any questions, feel free to drop me on LinkedIn, feel free to drop me on email. I'll be there. And thanks again for your 1 hour on a Sunday afternoon. And that's it.
Yeah, thank you so much, Gaurav, for your time. First of all, on a quick note, we have you have arranged a session, and yeah, seems like it was highly productive for all the people out here, right? So yeah, guys, please drop a heart in the chat for Gaurav for his time. And Gaurav, what do you think of the people out here?
Yeah, I think I've met with good people on this call. They have good understanding of the things. With the community guidance and with your guidance, I think they should be able to do good.
Great, great, great. Thank you. So anything you'd suggest for us to specifically focus on uh, from here?
Start like that is what I think the agenda was of the meeting. Like for example, I didn't want to give any gyan session on this session, on this call, but basically it would be more of key. If you think that trading by doing some activities, you can make a passive income for yourself using APIs and convert like one time effort, which can with a little monitoring, which can help you make good money or make your trading journey successful. So that is, I think, was the agenda of this call, just to give motivation or push that can help.
Awesome, awesome, great. So yeah, I believe it's time now, so we can wind up. Uh, is there anyone who is having any questions? There is probably
Hello,
no,
Vishal.
nothing as such. Yeah, yeah, yeah. Just tell me.
Can you please share the recording of yesterday's session?
Yeah, it will be shared. No, yesterday's session was not recorded. We'll give you a quick recap for the same on chat, maybe.
Okay,
Yeah.
thank
Cool,
you.
guys. So yeah, thank you so much, everyone. Thank you so much, Gaurav, again. Let's have an offline meeting with you. So we're actually coming to Bangalore pretty shortly. So yeah, if you have time, then obviously we can arrange something.
Sure, sure, that works.
Cool. So yeah, let's conclude. Thank you so much. Goodbye.
Thank you. Bye.